So this video is for somebody who is actually battling with entry model. So if you are somebody out there who is battling with entry model, well, this video is for you. Make sure you watch till the end. Don't forget, this is Tunde Thompson. So what we are going to be laying emphasis on today is actually a breaker block. How you can actually use breaker block to your advantage, and it's an entry model. First of all, the first question is that what is a breaker block? A breaker block is a smart money concept, SMC, or ICT trading term for an invalid order block that, after being broken by price, acts as a new support or resistance level. It signifies a shift in market structure, that's MSS, when institutional traders have reversed their intent, offering higher probability, low risk entry, and points during the market reversal and continuation. Well, all this might actually seems like English. The most important thing is actually the practical aspect of it. But you can't just go into your chart and go and be hunting for a breaker block. First of all, how does the breaker block look like? What are the plan you need to follow before saying that yes, you want to actually trade a breaker block? Now let's look at the plan now. The trading plan of a breaker block is, first of all, it must be in line with your market structure. It's not all breaker blocks that are actually valid. There are some breaker blocks that are not actually valid. If it's not in line with your market structure, trust me, you are not trading a breaker block. Secondly, it must sweep a recent sweep against the trend. Let's put it that way. Let's say I'm going to give you a drawing example, but you just need to understand that it must actually sweep a recent trend. Then thirdly, there must be a market structure shift. If market structure shift is not in place, there is no breaker, and you must see a retracement. There must be a retracement and a breakout. The market structure shift must actually come with momentum, and there must be a retracement. So how does a breaker block, how does it even look like? Let's start with the bullish order block. What does the bullish order block, what does it look like? First of all, if you are trading a bullish order block here, a bullish order block is going to look like something like this. First thing I said about a breaker block, about a bullish breaker block, is that the market structure, clearly you can see that this market actually has an uptrend movement, and not just that, we have this high, we have this low. Then again, there's some sort of manipulation. And when I say a breaker block, before you say something is a breaker block, you don't necessarily need to actually to break this low, the structure. They will do some sort of consolidation inside the structure. Look at this low, look at this high, look at this low. It's just to make sure that maybe traders will think, okay, this trade is going low, and they are going to like put their buy, they are going to be selling from here. Then all of a sudden, there's now going to be a momentum that will take them out, and a retracement that is going to take the real traders who actually trade the real breaker block here, and the continuation of markets. Now, let's look at what the bearish is actually saying. The bearish aspect of it is just the opposite of the bullish. So, like I said, market structure. What is the structure saying? It's actually bearish. That's the first thing. Then we can see some sort of an high, a low, and high. Then you would think maybe this is actually a breakout. They will sell it down. So the only thing that's going to save you to know that yes, a real breakout is happening, or it's actually a fake breakout, is that your market structure, your higher time frame market structure. Well, you are going to understand this better when we go into the real chart. All right, so this is actually a chart where I'm going to be explaining the bullish scenario and also the bearish scenario. So let's see what it says on the chart. But before then, if you are struggling with trading or you want to get signals, well, there is actually a group for that. The Tunde Thompson channel. You can reach out to me on Telegram, Tunde Thompson. To join the signal group is 30,000 naira or $30 for people outside Nigeria, and for the mentorship program is 150,000, $150 if you are outside Nigeria. And let's just take a quick look at some of our wins in the VIP signal group. This was on Wednesday. I told we took a trade before. I told them to take 80% off. Then I dropped just two trades today. That's Euro USD and GBP USD. Then Euro USD ran by 15 pips. I didn't know why they didn't run for so much. And GBP USD ran for 43 pips. Then GBP USD actually gave us um 80% run. Finally, it gave us the full TP, which was 91 pips. So these are what we drop daily, and there are sometimes I can maybe busy and I'll be like, there is no signal because I don't want to drop low quality signal. So you can reach out to me on Telegram at Tunde Thompson. Just type out, or you join our Telegram channel. The link is going to be in the description of this video. So let's go back to our teaching. So first things first, I'm going to be doing the bullish scenario first, so that we are going to understand how it really works. I feel like people just like the bullish scenario first, then the bearish scenario can now follow. So as you can see, the overall market structure, if you look at the market structure that we have clearly, is actually bullish. I feel like they don't even need to tell us. I mean, we can actually see, if we measure it from year to year, we see that the market structure is actually bullish. So what we are hunting for, what we are actually looking for, is that we want them to actually take out a low. We want them to take out a low. Then if a low is taken out, we have major lows and we have minor lows. All these ones, this is a major low. All these ones are like minor low. And something you should always notice is that you will see the market kind of like chopping around. It will not give you that much movement. It will be chopping around before they do their thing. So in a situation like this, we look at the minor structure. We have this high, we have this low, we have this high, we have this low. Okay, after taking out this low, we had a market structure shift here. Let me go into 30 minutes, in 15 minutes. And for clarity, you can see it at any time frame. But the best time all these things used to happen, I'm going to be giving you an hint, is majorly when a new session wants to enter. You know, the ending of a particular session is going to relax. Then the relaxation is going to bring about minor structures or consolidation. Then the new session will now open with momentum, breaking the whole consolidation. This is a session market. This is London session. Then this other color that you can see here is the New York session. So if I expand the chart very well, you can see that we did some sort of consolidation. They took out the low, or let's call it by structure, this low, this high, this low. And they move with momentum. Remember the trading plan. Market structure, overall market structure is bullish. Let's go back to it so that you understand what I'm saying. Overall market structure is bullish. Recent sweep against the trend. The market is bullish. What's the recent sweep? They swept a low. And after that, what happened? Market structure shift and retracement. There's actually a market structure shift here. And the market structure shift here, this serves as our breaker. You know that normally a breaker block is actually a failed order block. So normally the way they actually went this low, they are actually meant to respect this order block that we have here, and they are meant to start selling low from here. I mean, they are meant to start selling low from. But what did they do? They disrespected it totally. Some traders will be like, okay, this is a nice market structure, break of structure. Then they would now want to take the continuation and put their stop loss here. It's going to take them out. And why is it taking them out? Because that is not what the market structure is saying. Sometimes it's not all fair value gaps that are fair value gaps. Some are not fair value gaps. Some are just against the trend. That's why the foundation is very important, which is the original market structure. So we have this I, which is our breaker block. A breaker block is a failed order block. So we can say this is a breaker block. And we actually see the momentum push up, and they've given us a retracement already. So there is nothing stopping us from going long, putting our stop here. Then you can target external range liquidity. Presently I can't even find one, but let's do what should we do? Let's do one ratio 3, or maybe 1:4. Let's do one ratio 5. Let's do one ratio. Let's see if they can get there to 1:5. So since all our confluence are with us, and we can just basically go ahead and place a trade. Let's reach 2%, and at market we're already late for the party. They are already about to test it. So let's see how far they can actually go. All right, so they actually delivered to the full TP for us. They gave us the full TP. Well, you might be thinking maybe this is just 1 out of 100. Let me give us another bullish example. Let me give us another bullish example so that you will understand it better. I'm going to be giving two examples each on the bullish scenario and the bearish scenario. So let's cover another um another bullish scenario. Let's see. Let's see if we can see anything. Have in mind that we are actually in a bullish market. Have it in mind that we are in a bullish market presently. Okay, do we have? Let's just quickly look for. Let's look for. So I think we're about to have. So if we look at this place now, we see that the low has actually been swept. We see the low being swept. We have this high, we have this low, we have this high, we have this low. After sweeping the low, what happened? They move up aggressively, very aggressive. This is meant to be our order block, but our order block was this. I mean, let me mark it out. This is a sweep of the liquidity. Our order block was being disrespected here. After it's been disrespected, what happened? We have an aggressive push up. Okay, so look at this high now. Look at the high we have here. Okay, look at the high we have here. So we can basically say, okay, fine. Since we have an aggressive push up with momentum, and this has turned to a breaker block for us, breaker breaker block. Okay, so we can then say let's take our long entry here and our stop loss here. Then our take profits can be at this high. This is 1:2, which is actually fair enough. But let's do 1:4.6 or whatever. So we can now place let's pay as our entry. Let's go with 2% again. Let's see how they react to it, which is nice. 1:2 will be out by here. But if you have an external range liquidity that maybe you are targeting, you can actually go for it. So we actually eat take profit. Oh, what happened? They didn't trigger the buy limit, but you guys understood what I'm trying to explain. So yeah, that on that. Let's now go to the bearish scenario of things now. All right, so this is in the case of a bearish scenario. So we can clearly see that the market structure we're having is actually bearish. Like, look at it, bearish. Now, let's now look at a minor structure that is being taken out, which now turned to a breaker block. So, and always take note that 9 out of 10 times they used to actually execute this during the start of a new session. It used to happen most times during the start of a, a new session. So we can clearly see that from here, if we look closely, we look here. First of all, the overall market is actually bearish. If we look closely here, we can see that yes, there is actually a break of structure. If I am to be a trader here, I will be looking to go long here, maybe put my stop loss here, and my target is going to be here. So these are ways they use to liquidate traders. Having something like this, if you have something like this, what do you think they are going to do? Well, as a trader, this is right, but the first thing, which is the foundation, is actually what is the market structure. If you get the market structure wrongly, then you are wrong. So let's see what the market is going to do, if it's going to respect it or not. So this is another block which should be respected. Then what did they do? They sold it down aggressively, now turning this that we have here, this whole structure, now turning it to what? Now turning it to a breaker block. So you can mark it using the wick, or you can mark it using the body. But in a situation like this, let's use the body. Let's see if they will get back there. So this now turn to a breaker. Why? Because our market structure tells us that we actually barely show it, just trying to liquidate some traders. So my stop loss is going to be somewhere here. Okay, it's going to be at the high here. And my take profit, we can do 1:3. Let's do 1:3. So let me place the order. Let's place the order. So we do 2%. We do it at limit. We save it. So we are basically expecting price to actually retrace back into this place. So we see the momentum of the candle. If they do, it's fine. If they don't, it's also fine. Okay, so we have a very nice tapping. It was a very nice like tapping. So one thing that should follow after the tapping is an aggressive breakdown. And if you take note very well, it was the entrance of London. I mean, the Tokyo actually did the tapping, but the um session did the continuation. So it's not all the time you will be expecting a trade to actually, you will just see that they've broken down aggressively. But the thing is that what is the former narrative? What is the narrative they are coming with? So if the former session, if they've done justice, then you don't have any issue. Just take your entry and take the shot. So let's take another example on this same trade, which is same. I still want to follow the bearish pattern. Let's still follow the bearish pattern and let's see what they can actually. Oh my god. Okay, so actually I think I missed it, but let me explain with this. I missed it. Let me explain with this. So if you look closely here, you will notice that we are coming with an high. This high, then some traders will be like, okay, since this high has formed, let them take their entry somewhere here. Let's drop into 5 minutes so that you will see it clearly. So they will see that this high has formed, then they will want to put their entry here. They want to do something like they want to go long like this, put their stop loss here, and their take profit at this high. They'll be thinking maybe it's a market structure shift. But what they did not know is that the market structure is actually still bearish. So the market will take them out. So it's that advantage that you are going to use. That's now the market has now turned to a breaker block. So your own since you understand the market structure, yeah, so you are not going to have any issue. Your stop loss will be here at this high, and your entry is actually going to be this place. But the thing is that if you take this trade like this, you're actually going to miss it. Okay, let's only be 15 minutes. Okay. If okay, 15 minutes. Okay, this is the last low. Since we have more bodies than weak. So I will just be tapped in nicely, and maybe our take profit can be one ratio. I don't know what let's say 1:5 or 1:6 or whatever. Alright, so they didn't actually get to the take profit, but at least we get the idea of what a breaker block is. This right here is a breaker block. Okay, this right here is a breaker block. They had a very nice tap and they started sweeping low. This right here too is a breaker block. So they had a nice tapping into it and they started selling down. So if you like this video, please do well to drop a thumbs up and don't forget to follow my account. This is what brings encouragement to me making videos. So to support me, I didn't ask for too much. Just click the like, just follow my account. Don't forget, this is Tunde Thompson. You are welcome.